accelerated growth could reduce poverty to 41.9% by 2024, depending on how COVID-19 evolves, how long Russia's invasion of Ukraine and related sanctions last, the rate of food inflation, and any environmental shocks that negatively affect households due to their limited adaptive capacity. Legislators argue that this year has not been easy for anyone and that the government should give priority to worthwhile initiatives that would shield Ugandans from the economic shocks the nation has endured this year.
It is required in the next year not only to revise the structure of the economy, but to revise our discipline as leaders, to revise our interest, to revise where we put the first priorities of the country, and also master the interests of the nationals, what their preference lies, where their preference lies, is where the action by the leaders must lie. That's when we shall manage to solve a few challenges, and we shall be in a better position to wish Ugandans a successful next New Year, and also a happy New Year. But considering this year, the country is running in a zigzag way, is running upside down.
According to Honorable Tebandeke, if Uganda is to gain from the global market, the government must likewise be assertive in seeking out markets for its goods and combating price variations.
The government will also be mandated to look, not only it's beyond looking, but to rummage for the constant market for the agricultural produce, where it can fight against the price fluctuations, the shortage of market, the bouncing of Ugandans' commodities, even improving on the quality. I think that's when we can now create and build, develop a stronger economy, which will please all Ugandans as a whole.
Honorable Kasulu, who is also the Vice Chairperson of the Infrastructure Committee, says that Uganda has the capacity of doing better than any other East African country if only its transport policy is revised, especially if the railway transport is put back very fast.
Put back our railway. We put back, we utilize our lakes to make sure we have vessels which moves goods here and there within the East African region. Uganda is in a better position to reap more than any East African country. So for me, I would implore government to focus on making sure we revamp our rail network and make sure we use the advantage of being in the center of East Africa.
Moving on to the Karamoja region, which is the poorest in the nation, the government has launched a number of initiatives like Emyoga, the Youth Livelihood Fund, the Parish Development Model, among others. However, as noted by Honorable Hilary Lukwang, none of these initiatives have resulted in any development.
2 months ago, I went to my community and asked them, how have you utilized the Emyoga Fund? Then they told me that, the government should build more prisons because they have eaten the money that has been given by the government. Because remember, they also gave to elderly and so many categories of people. But as we speak now, some of these people have never even returned a penny back to the treasury, because most of the groups, they have already eaten the money. Yes, this is the corruption we are talking about. Even the people, their minds have become corrupted. There is a lot of money, but you don't need a lot of money to become rich. It's knowledge that can make you rich.
The budget framework document is currently being examined by the Budget Committee of Parliament, and lawmakers anticipate that the government will concentrate primarily on economic recovery for the year 2023-2024. Samlanifa, Smart 24 TV, Business Today.
And now let's talk about strengthening regional trade. Uganda's new term macroeconomic outlook foresees sustained recovery, driving real gross domestic product (GDP) growth to 5.5% during the fiscal year 2022-2023 from 4.7% in fiscal year 2021-2022. Not very different from the forecast of June 2022 though, and this broad-based recovery started at the beginning of the year and quickly accelerated throughout 2022. Now, the medium-term outlook also remains broadly positive, hinged on continued implementation of the government's third National Development Plan, the NDP3, and the full recovery of global trade. We have more in this report.
As participants in the East African community, the member states need to harmonize their trade policies, lower trade barriers, enhance the efficiency of their transportation networks, and raise the standards of their manufactured commodities. Strengthening Uganda's regional trade offers also depends on having lucrative market prospects and high-quality products.
Strengthening regional trade offers in Uganda, one of them is aligning our policy to the East African community. As much as we're a party, we have these policies in place. We just need to align our implementation bit. For example, we look at how the free trade happens. We look at the policy in place. If we are supposed to say that trade is supposed to be free across the borders, then the implementation should be done. We don't need to have borders closed. We just need to have better dialoguing processes.
Because of the various instabilities in the member states, the East African community is on a difficult path to establishing viable trade offers. While obtaining these regional trade offers, important factors such as having a common currency, common market, and monetary union always come to play.
And from an academic point of view, I understand we have had an elusive journey when it comes to achieving regional integration. And of course, it happens around 7 stages. And I think by the time we reach at a common currency, we are at the stage of forming a monetary union. So prior to that, there is that journey that we have walked, that initially we start from a preferential trade agreement, literally which envisages that as countries, when we are near each other, we are able to trade at lower transaction costs because the distance is small. But when we are at that stage of preferential trade agreement, then countries can go on to form a free trade area where they now reduce on the barriers to trade, such that the exchange of goods and services is a bit seamless. But now moving from a free trade area, countries can go to a customs union. East African community has been there.
By cutting trade-related taxes, removing non-trade barriers, and implementing other trade facilitation measures, Uganda has a chance to accelerate regional trade integration. Regional trade will increase Uganda's GDP by roughly 3.3% by 2035. It would reduce restrictions by investing in energy and transportation infrastructure, which will assist revive private investment, enhance agricultural production, and energize the light manufacturing sector. Martha Nimsima, Smart 24 TV, Business Today.
And now, meanwhile, NSSF has got plans for the financial year 2022-2023, and of which the National Social Security Fund has pledged to improve the quality of life for its members by offering various goods such as the Black Chain Project for artisans, and by forming relationships with organizations that promote awareness in order to meet members' needs in the future. This report was compiled by Samuel Kirimunda for Business Today.
The assets of the National Social Security Fund recently increased by 11% from 15.6 trillion Ugandan shillings to 17.3 trillion. And the fund also experienced a 9% increase in contributions from one year to the next. Henry Musasizi, the state's Minister for Finance, says the fund will guard against inflation.
Delivery of the same, the fund had to ensure liquidity by investing in short-term assets with lower yields, and this has negatively impacted on the return to the members. The fund continues to ensure that your money is protected against inflation. The principle of protection of members' savings against inflation is at the heart of fiduciary responsibility. I'm happy to note that despite the challenges in the operating environment, the fund has consistently surpassed its target on a return that is above the 10-year average rate of inflation.
The Managing Director of the National Social Security Fund, Richard Byarugaba, highlighted a few of the future goals that will be given prior to the upcoming fiscal year 2022-2023, when the annual performance of the fiscal year 2021-2022 was released.
Our future plans continue to be that we will commit to giving our members a better life. That's our purpose. Under coverage, we believe that one of the things we need to do is to have a mass registration of membership. We've told you about the informal market. How are we going to achieve that? We believe technology will be one of the things we use. We will continue to do a lot of financial literacy and financial education and advisory. And we will develop those channels to make sure that our members are able to mass register. We are wrapping up our partnerships with URA, URBS, and NIRA to improve on our compliance. But more importantly, we are also working with a lot of partnerships like the unions, like the Ministry of Gender, Labor and Social Development, and some of the employer organizations to be able to mass sensitize our members so that they can begin to contribute, including working with the diaspora community, especially the growing diaspora community in places like Dubai and Saudi Arabia, where labor is now going, and yet these individuals are not saving for NSSF. We think that by getting into these partnerships of sensitization with those bodies, we'll be able to guarantee adequate member retirements going into the future.
Byarugaba gave the nation the word that they would also be developing an artisan project, but in order for other people to comprehend it, they need to be more financially literate and sensitive.
We call it the Black Swan Project. The problem is that a lot of the artisans have income that's earned, but it's not predictable. We also know that they struggle to save. They normally want to eat their money, as they say, and not invest. The challenge is that there is lack of motivation to sustain this good investment habit. And we also know that they don't have financial literacy to be able to make those decisions. So our project is around organizing them into groups, making sure that when they are spending money, they are passively saving. When we've deducted their savings and they are passively saving, we then invest their savings, and then we can then allow them, under certain conditions, to liquidate their savings as and when they are needed.
According to policy, the NSSF must pay interest that is 2 percentage points higher than inflation rate during a 10-year period as whole. Inflation has, however, increased significantly during the past 10 years. After the midterm access was passed, the NSSF made the decision to invest more in short-term assets and less in longer-term assets, which are typically more profitable. This decision, combined with the decline in value of investments in regional companies, resulted in a smaller interest payout. Andrew Barije, Samuel Chirimunda, Smart 24, Business Today.
Well, now, Japanese economy unexpectedly shrinks, and this report comes in from our international situation here. Now, to date, the Bank of Japan has maintained its ultra-loose monetary policy in an effort to strengthen its economy. However, earlier this week, it caught the market off guard by increasing the ceiling on the interest rate on its 10-year government bonds from 0.25 to 0.5%. As a result, the Japanese yen has increased dramatically in value relative to the United States dollar, reaching 151 yen to the dollar for the very first time since 1990. Desire Nambiru gives us an insight on Japan's economy.
Virtually every significant central bank in the globe has struggled to keep up with the pace set by the Federal Reserve as it has regularly raised interest rates in the United States in a bid to rein in inflation that has been out of control. Then there is Bank of Japan. The Bank of Japan, which has never been one to follow trends, has stayed resolutely committed to its ultra-low interest rates, claiming that raising the cost of money now would simply stifle already weak demand and impede a fragile economic recovery from the pandemic. Japan saw one of the highest rates of economic development worldwide from 1960s to 1980s. The use of effective industrial practices and high rates of investments in the productive plant and equipment were the driving force behind this rise.
In order to cool down the real estate market, the Bank of Japan raised interest rates, which contributed to economic slump. In the 3 months leading up to September 2022, the Japanese economy contracted by 0.3% on the quarterly basis, missing the market estimate of 0.3% growth and coming off the previous reported 1.1% increase. The core consumer price inflation rate in Japan increased marginally to 3.7% in November, the highest level since 1981. Oil output was hampered by the Middle East conflict, which also raised energy costs sharply. But after years of attempts to increase inflation, Japanese consumers are suddenly suffering from increased costs despite stable earnings. Design Nambiru, Smart 24 TV, Business Today.
We'll continue and we'll be returning with the coffee court. Stick around. Good evening.